Hey everybody, Smart Silver Stacker here. Hope you're doing well. So there are major developments in the gold and the silver markets playing out before our very eyes. Today, the spot price of gold rose above $2,800 for the first time in history, and silver has had its own very significant technical breakout. Yesterday, it closed above $31, and today it appears to have retested that level that once was significant resistance. Now it's turning into support. So the scenario for the metals is very bullish moving forward, and contributing to this are tariffs, which have now been confirmed on major gold and silver producers. And we just had Donald Trump issue a threat against the BRICS nations. Now, that could be a double-edged sword. Maybe it will slow down de-dollarization efforts, or maybe it will accelerate them. And this is going to be very important for the precious metals markets moving forward. And it has some major implications for the stackers out there. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. All right, so starting off today with the chart of gold, which yesterday closed at the highest closing price on record, closing at $27.93. And then today, the spot price of gold broke above $2,800 for the first time in history. It rose as high as $28.17 intraday. Now, silver has also had its own breakout. We've talked about this falling wedge consolidation that silver has been in since October of last year. It had this ABC correction, which is now completed and played out. And silver has broken out of this wedge. After it did that, it tested this resistance at $31 several times. Well, yesterday it broke above that, moving up 2.6% in one day, rising up as high as $31.73. Now, what we're seeing today, to me, is actually a very bullish development, because what we saw was the silver price fell, but it didn't penetrate the $31 level. So what this suggests is that $31 was resistance. You can see it touched it 1, 2, 3, 4 times over the past week. And now what has happened is that silver has fallen, but it has stayed above $31. This suggests that 31 may now be support, the level that was once resistance. So what we're set up for here is a significant move higher in the silver price. And there are a number of factors contributing to gold and silver's breakout. We're going to talk about them in today's video, but there are several, so bear with me. Now, the first is that Donald Trump has threatened the BRICS nations with 100% tariffs should they attempt to de-dollarize their economies. He posted the following on his Truth Social platform, quote, "We are going to require a commitment from these seemingly hostile countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs." Now, I want to draw your attention to this document from the Congressional Research Service. This dates back to 2021. That shows you that the de-dollarization phenomenon is nothing new. And even then, they said that for more than a decade, China and Russia have sought to reduce their use of the US dollar or de-dollarize their economies in an effort to shield their economies from US sanctions, reduce exposure to the effects of US economic and monetary policy, and assert global economic leadership. So if you ask me, threatening the BRICS nations collectively with a 100% tariff suggests that they will be even more motivated to pursue their de-dollarization agenda than they were previously. Now, I posted the following poll on X. You can follow me over there at Stack Smarter. I asked if this threat would lead to faster de-dollarization or slower de-dollarization. Now, so far it looks like the consensus is faster, although there's only 12 votes. So what I would like you to do is head over to X, follow me at Stack Smarter, and then give me your input. Do you think that Donald Trump threatening sanctions against BRICS is going to lead to a faster or a slower de-dollarization process? I think de-dollarization at this point is inevitable, but the economic warfare and the threats may slow it down, possibly, or they could make it an even more rapid process. But even if the BRICS nations don't pursue an alternative BRICS unit or BRICS-based currency, one thing they are almost certainly to continue doing is accumulating gold, because they don't really need a alternative currency to the dollar, all they need is gold. And China and Russia and the rest of the central banks of the global south and the BRICS nations have been accumulating gold. In fact, in 2022, central banks around the world bought a record amount of gold, and that trend has continued ever since. This is a quote from the World Gold Council. In our view, demand in excess of 500 tons, the approximate long-term trend, should have a net positive effect on performance. And we believe central bank demand in 2025 will surpass that. They go on to say that a deacceleration below that level could bring additional pressures to gold. But do you think that after being threatened with 100% tariffs, the central banks of the BRICS nations are going to slow down their gold purchases? Highly unlikely. And it's very interesting to note that despite the fact that gold is at record high prices, central banks continue to accumulate it. In fact, that is what is driving the gold price to these record highs. It's not retail investors. If you go down to your local coin shop or you go over to SD Bullion, look at the premiums on physical products right now. They're very low. And that is because retail investors still haven't gotten the memo that in an era of massive unfunded deficit spending, currency debasement, and trade wars, hard assets are what you want to have. But the smart money is loading up on those assets like there is no tomorrow. Now, another factor that is contributing to the breakout in gold and silver is the fact that a 25% tariff on Canada and on Mexico has now been confirmed by the Trump administration. This is going into effect tomorrow, February 1st, and a 10% tariff on China. Now, China is the world's largest gold producer. Mexico is the world's largest silver producer. Canada is also a producer of a host of commodities, including gold. They're the world's number 4 producer. So this is having a huge impact on the gold market. We're going to talk about that in just a moment. But first, I do want to take a break and give you what I consider to be a bit of a bright spot in the gold and silver markets amongst all of this news of tariffs, trade wars, and doom and gloom. So one good piece of news for stackers here is that we just got the Florida GoldBacks released, and I just got my hands on a set of these. I've got to tell you, these things are like works of art. I mean, they have stepped their game up on the artwork so much. It is incredible when you look at these compared to the previous issues of GoldBacks. And I always liked the GoldBack art, but this is taking it to another level. And I mean, every one of these images contains a tremendous amount of detail and references to the Florida environments and wildlife and history. You know, you got this pirate girl here, which is a reference to Florida's Treasure Coast. You've got a flapper girl talking about the history of Florida in the 1920s. I mean, I feel like I've learned a lot about the state just by looking at these things and looking up some of this information. But if you haven't seen the Florida GoldBacks yet, I just wanted to show them to you because they are really, really incredible. They've got 2 new denominations as well. They got 100 goldback notes, so that's 1/10 of an ounce of 24 karat gold in this note. And then all the way down to a half goldback note. This is even more fractional than the 1 goldback. Now they have a note with 1/2000th of a troy ounce of 24 karat gold. So a huge upgrade to the goldback art with this release, and they are even more functional now with the new units. And I'm very excited that SD Bullion is now pricing these in such a way that they are basically treated as fungible assets, meaning that if you buy 100 of the 1 goldback notes, it's going to cost you the same as 1 of the 100 goldback notes. And that is the type of pricing structure that you really want for something that is designed to be a fungible asset and to serve as a real circulating gold sound money barter instrument. So let me know what you think about these in the comments down below. Now let's talk about the effect of tariffs on the gold and silver market. This is a headline from the Financial Times. Rush to stockpile gold in New York leads to London shortage. And they are reporting that the wait to withdraw bullion from the Bank of England has risen from a day or two to several weeks following fears of Trump's tariffs creating shortages of the precious metals. You can see from this chart from that story that the amount of gold in the United States has surged following the election of Trump. The problem is that investors and industrial users of gold and silver are rushing to get this stuff into the US before the tariffs go into effect. But now we're at the point where they begin tomorrow. And what this is doing is it's creating the potential for a squeeze in these commodity markets. You can see here from the LBMA London Vault data that the amount of silver on hand has dipped sharply. Now, this data only goes back to 2017, but the amount of silver in the LBMA's vault is near the lowest levels in reported history. And this report from the Metals and Miners Substack quotes an unnamed industry executive who says that people can't get their hands on gold because so much has been shipped to New York and the rest is stuck in the queue. Liquidity in the London market has been diminished. Now, there are those who will claim that there's plenty of gold, there's plenty of silver in the vaults at the LBMA and elsewhere, that there's all these stockpiles around the world. And it's true, there is a lot of gold and there is a lot of silver, but the important part is that there may not be a lot of gold and silver for sale. Much of that bullion that sits in vaults around the world, it's claimed, right? The owner owns it, they lay a claim to it, and they don't necessarily want to sell or lease it onto the market, especially at today's prices, given what they are seeing play out before their eyes. Tariffs, trade wars, a lot of uncertainty, and therefore it doesn't really matter how much gold or silver there is in absolute terms. What matters is how much is available for lease, how much is available for sale. And if there aren't enough sellers, then liquidity dries up and you can see big moves to the upside. And in assets like gold and silver, which are heavily shorted and manipulated, I mean, that's no secret, what you have is the potential for a short squeeze where if the price rises too rapidly, the concentrated short positions are forced to go out into the market and get the actual physical metal to cover their short positions, and that can lead to further spiking prices. Now, squeezes in commodity markets are not unheard of. However, a squeeze in the gold or silver market will have significantly bigger impacts than a squeeze on an asset like, say, nickel or copper, which is not a fundamental underpinning of the financial system the way that gold is. Also contributing to the potential for a squeeze in silver, and I think that's where the biggest potential lies, because silver is truly one of the most undervalued assets in the world. It's one of the most heavily manipulated. It's a smaller market than gold. So that means when liquidity dries up, it can be even more volatile. And another factor that is contributing to the potential for the squeeze is the massive deficits throughout the physical silver market. So this is a report that was published 2 days ago by the Silver Institute, in which they forecast that the silver market will remain in a deficit in 2025. That's for the 5th year in a row, and that this year's deficit will be to the tune of 149 million ounces. That is a very significant deficit when you consider that global silver production from mining and recycling is right around 1 billion ounces. And, when you think about those numbers too, it's quite remarkable that at today's prices, $31, we think, oh, wow, silver is up more than 30% year over year. So this is significant. But think about how cheap an annual year of silver production really is. I mean, it's about $31 billion worth. That is a drop in the bucket when it comes to financial markets and derivatives markets. I mean, it is an absurdly low valuation to give to an entire year's production of an incredibly important industrial metal. And it just goes to show you how ripe these manipulated markets are for a squeeze and for a significant move higher, especially given how uncertain events are right now and how the globe is breaking down into anti-globalist trade wars and tariffs. Things are getting very interesting in the gold and silver markets, and the tariffs are confirmed to go into effect tomorrow. So we're not going to have to wait long to see what their ultimate impact is. Leave me a comment down below to let me know how you think this will play out. If you want to see more videos like this one, check out the video popping up on your screen right now. Thanks for watching, everybody. Stay safe and happy stacking, and I'll catch you next time. Smart Silver Stacker, out.